Hi, everybody, and welcome to this iteration of our afternoon Red Cloud webinars. I am pleased here to have with you Jonathan French from Foran Mining, who will be sharing with us some updates on the project. Thanks very much for joining us today, John.
Thanks, Seb. Appreciate it, and thanks for having me.
No, that's great. If you have the ability to put your screen up there, we'll jump into it and get started.
Yep. No, I think it's all here on the screen. And yes, like I said, thank you very much for having me, and everyone on the line, thank you very much for joining and spending your time with us here. So, like Seb said, my name is Jonathan French. I'm VP Capital Markets and Corporate or External Affairs for Foran Mining. Our ticker is FOM. We're a 1.1 billion market cap company on the TSX. And as it shows on the front page here, our goal is to deliver a zero carbon copper asset in one of the best jurisdictions globally and focusing on maximizing shareholder returns. So when looking at Foran, we basically have a three-pronged strategy. First prong being delivering initial phase production from our McIlvenna Bay mine in Saskatchewan. We put out a feasibility study earlier last year, or in 2022, which outlined a 4,200 ton a day underground mine operation with an 18-year mine life, producing around 66 million pounds of copper equivalent a year. So and that is our first prong. Our second prong, and as we're constructing and building our first phase, we're going to continue to explore, define, and expand known resources and additional targets on our properties and build this into a multi-decade opportunity. VMS deposits, as McIlvenna Bay is, typically can double over time once you're in production. As you get deeper and as you expand your underground and you know exactly what kind of resources you have. We'll go through it a little bit later, but generally speaking, other historical VMS deposits within Canada have about 10 to 20 times more drilling done on them. And given where we're at in our development phase, we really have a blank canvas of additional opportunities to turn this into, potentially one of Canada's largest discoveries. And our third prong encapsulates everything that we've done, but also is based on our net positive strategy. And that is our goal and our target to deliver a carbon neutral operation. It's not easy to do something like this. It's really difficult and never been done before in the mining industry, but we think over time, this can lead to superior investment returns for our shareholders. And that is really our core goal is maximizing upside opportunity while minimizing downside risk. I think one of the benefits and opportunities that we have here at Foran, and we're really grateful for, is having long-term, like-minded investors that are focused on the growth and the path and vision that we see at McIlvenna Bay. We've recently announced a proposed investment by Ontario Teachers Pension Plan. Fairfax Financial owns 23% of the company, as well as mining magnate Pierre Lassonde has been involved since 2009. So this really gives us a solid investors base that gives us the opportunity to not worry about the day-to-day, but really focus on the long-term goals and visions that we have here and turning this into Canada's next great mining champion. Looking at our location, we're 65 kilometers from Flin Flon, Manitoba. If that rings a bell to you, that's really been the heartbeat of the Manitoba ops for Hud Bay for the better part of a few decades. And the reason why I point that out is we're located really close to great infrastructure. You have rail, you have a new highway, the Highway 106 that goes right through our project, power lines coming from the south or from the north from a hydroelectric facility, and we'll talk about that more in future. But the key thing here is access to qualified labor. So 777 mine that's in the middle of your screen there shut down last year, and it really opens a pool of capital and labor capital for us to utilize as we begin our construction and future production at McIlvenna Bay. I think one thing that still is rather underutilized or unknown is really geopolitical risk. When you look at mining industry and specifically the copper industry, a lot of these larger assets and big producers are located in different parts of the world. One analogy or one context, if you think about OPEC, 13 countries, they control about 30% of world oil supply and work together and help structure pricing. And, everyone seems to talk about OPEC. On the copper side, there are 3 countries that generate 50% of global copper supply. Chile, Peru, and the DRC. And this really shows the challenge there is in future risk, where you have some industries and some countries that have a lot of geopolitical uncertainty on taxes, royalties, regimes. And what this leads to is when you're building an asset that's going to take a couple $2 billion, ours is much smaller than this, but when you look at some of these international operations that'll transact and produce for 40 years, you really want to have certainty of law and understand exactly what you're going after. So being in Saskatchewan, Saskatchewan is the 3rd rank globally according to the Fraser Institute. We're very fortunate to be where we are, and we're happy to be part of this close-knit community. And I think this is one benefit on what Foran has, compared to peers. And with this great relationship, we've been able to transact and update on some significant milestones. One of them being our key environmental assessment permit, which was received in July of this year. This is basically the big stepping stone and the big catalyst on the permitting side to get our mine into a construction decision, which should happen in the next couple months. Secondly, and just as important, is our collaboration agreement with the local Indigenous community, which is the Peter Valentine Cree Nation. We signed that in June of this year, and really we made a tailor-made agreement with the PBCN and really focused on being part of the community and focusing on education and jobs and respect for the community over the life of a mine, because we feel like we're going to be here for multi-decades, and we want to be a great partner as we build and increase economic wealth within the remote part of eastern Saskatchewan, northeast Saskatchewan. And just touching back on capital intensity, on our feasibility study that we put out last year, our initial capex was just under $400 million Canadian. Some of these larger operations that have been built or planned to be built, are going to cost $5-10 billion to be built. And on a capex per ton of copper production, we are top quartile in this sense. And essentially what this means is, if we have some cost inflation, as we're seeing across the industry, or labor constraints, and there's anything that could change capex figures for anyone across the board, a 5-10% change in our capex is very palatable compared to something that's going to cost $10 or $12 billion. So from that standpoint, we're very protected in the size of our production. We're nimble and we're small and we're large. It's more of a higher grade deposit, 2.5% copper equivalent. For some of these larger open pit operations, grades are around 0.5% copper. So, that allows us to be very nimble and get this thing into production. And as we do that, we will continue on our second phase and our second pillar, which is our exploration. So just looking at VMS deposits, you'll see in the middle of the screen here some other well-known ones in Canada, the Flin Flon Belt that we just recently spoke about. You also have Bathurst, Kigcrete, and Agnico Eagle's LaRonde. Basically, what you're trying to show here is that once these things are in production, they tend to go for multi-decades. And we think we are in that opportunity as well. And we have that potential at our project. We just need to start using capital towards exploration. And that is what we're doing. And we've been doing it for about 2 years, and we've already found some extremely exciting discoveries, which we'll touch on. But basically, just want to highlight that these type of assets are long life, high IRR, and expansion capex is very accretive to value for shareholders over time. Discussing our exploration strategy, and if you look on the right side of your screen here, McIlvenna Bay is kind of in the middle of the property. But on the left chart, I'd like to point out here is that Foran has for the last 20 years have been an undercapitalized exploration story focused on every dollar drilled at McIlvenna Bay to de-risk towards a construction decision. With a change in management 2 years or 3 years ago, we've had Fairfax come in, we've had some other, and basically, in a nutshell, have had additional capex or capital to put at work towards our exploration plan. And as you can see here, there's been 10 to 20 times more drilling on some of these larger, well-capitalized VMS belts over time. And we think over time, this is something that we can catch up on. And during that time, we expect to hit some additional resource opportunities and extend this mine life and really try to build a centralized milling facility over time and build this into, like I said, one of Canada's greatest mining complexes. And this is what we've done in the last year and a half. Is last year we found a new discovery, Tesla, which is located about 300 meters away from our McIlvenna Bay deposit. You'll see it on the left side of the screen here. see if I can over here. Oh, anyways, this is Tesla here. But more importantly, what we've also just uncovered last week is this bridge zone located in between McIlvenna Bay and Tesla. So what we've really uncovered here is potentially the connector that pulls this into one entirely large zone and could turn out to be one of the most prolific discoveries of EMS discoveries in Canada. So we are still in the early stages of the exploration side of things on Tesla, but we are just highlighting here that we have only stepped out 300 meters and we found a potential 25 million ton opportunity just in their backside of McIlvenna Bay here. And this is what has been so significant, is this bridge zone in the middle between Tesla and McIlvenna Bay, where we've really linked these zones, and there's a real opportunity, like I said, to turn this into one of the larger deposits, VMS discoveries of time. And we're not just stopping here at Tesla. So we've had a very strategic approach because we're so focused on capital allocation. We'll focus our geoscience and geophysics work on uncovering these conductors and then systematically drilling them. As you can see in the slide here, Tesla, the yellow plates here, we systematically discovered them, drilled them, and were successful. What we have uncovered with recent other geophysical surveys and electromagnetic surveys is other conductors, Higgs 1 and Higgs 2, which are offset another 300 meters from Tesla. We haven't drilled this yet. We're currently drilling it, I should say, right now. We expect to put results out in the next couple months. But this is just showcasing the opportunities that we're finding so close to McIlvenna Bay and Tesla. And, we're just at the early stages or the early innings of really uncovering what our land package has to hold. Talking about our third pillar, the ESG side, targeting carbon neutral production. The biggest component in your GHG emissions on a mine are your power costs. We're fortunate to have an agreement to have our hydropower from the Island Falls facility about 100 kilometers north from our mine tied into a power line, and that essentially can cut 2/3 of your emission. We're also planning and of using battery electric vehicle fleets underground. We've actually had our first battery electric jumbo delivered on site, and really that will twofold help us on our underground emission standards, but also reduce the upfront capex because our underground ventilation costs won't be as onerous, given the fact that we don't have to worry about diesel particulate underground, and we can make those much more narrow, cost efficient, and really save on the upfront. We're also looking at other carbon capture technologies, carbon storage or carbon sinks underground, stuff that hasn't been done in mining before, but really trying to do everything we can to achieve carbon neutral and potentially carbon negative opportunities. And I think over time, this has, like I mentioned, a twofold benefit here where companies should trade a premium that have green energy or carbon neutral initiatives and are actually delivering on those targets. But secondly, you should be able to get a premium on your copper concentrator and your copper and zinc concentrate, as smelters will obviously pay premiums to have zero scope 3 emissions through their own GHG targets. So there's a lot of opportunity there for us, and we're really excited to be doing the right thing, not only for ourselves and investors, but the environment and society as a whole. Just on the capital profile or capital structure here, Fairfax 23% shareholder. The other important thing I should mention is management owning 17% of the stock. There's real capital at risk here with shareholders alongside, and they've really been, that's one thing that we always want to emphasize, is that it's our money too, and we really are focused on limiting downside risk, maximizing upside potential, all while building this asset and exploring and turning it into something that we think over the next couple decades can turn into a significant mining opportunity in Canada. And just lastly, my final slide here is on our catalysts. We do have plenty catalysts up and coming. Typically, we'll be putting out exploration results on a monthly basis. We'll also be announcing some construction updates as well as pre-development programs, some updates on our ESG businesses. there's index additions or ETF inflow opportunities as well on a technical side. And really, we're excited to be participating in all these initiatives, and we'll keep all our investors up to speed as frequently as we can. And we're really excited to finish off this year and head into 2024 building this asset and building the next great mine, like I've said. Anyways, that's it for me, and thank you, Seb.
My pleasure. So I have got a couple questions that have come through to me here, John. First and foremost, somebody's asking if of the over $100 million that you have in treasury right now, were you guys able to take advantage of some of the additional flow-through type credits that have been recently brought in Saskatchewan?
Yes, we were. So we recently did a transaction back in March for $100 million, of which $25 million was the flow through, and the premium from that I think was 51%. So really being able to take an opportunity of the critical metals initiative, getting that flow through premium, and really at the end of the day limiting dilution for shareholders and existing shareholders, which is at the end of the day our core focus.
Oh, that's great. And then maybe I'll just have a follow-on to that one. I mean, when you're talking about minimizing dilution, I'm not sure many people know this, but John actually came from the buy side. So what was it that made you come from the buy side and move on to sort of the issuer side of the table, which is a transition that can be difficult because you have hundreds of people throwing you ideas and questions that you can turn down, and now you've got to be the guy that's trying to come up with the best pitch. You must really like this opportunity, or I don't think you would have moved.
Yeah, no, it's a brilliant question, Seb, and yeah, it's essentially that. I think I always wanted to try look at an opportunity on the corporate side, but it really made sure that I wanted to pair it with one, a great team, but two, a great asset, because I love talking stocks. I love being in the investment community and part of capital markets, but if you don't have a good story to tell, it makes life a little bit difficult. But McIlvenna Bay and the opportunities here, and the greenfields opportunity is a story that tells itself. And having the team, CEO Dan Myerson, who came from Glencore and tried to acquire the asset when he was at Glencore, and eventually had to join the team to really see this thing through. And our CFO James Steeles, as well as Director Darren Morecombe, has really been leading the charge in building this team and building the development and where we're at today. It's at the end of the day, it became a no-brainer that I wanted to be part of this team and really grow this asset and into something real. And at the end of the day, when that happened, it was only a matter of time and opportunity, and thankfully they liked me as well, so it worked out.
Oh, that's good. And then how far down the line do you think that these, we all know that VMS deposits sort of occur in clusters or a string of pearls or a trend or however people want to talk about it. You mentioned that you have all these other undrilled exploration targets. How far down do these potentially extend? I feel like there's possibility that the opportunity could be endless.
Yeah, another great question. We really don't know. With McIlvenna Bay, it actually extends 1.3 kilometers down underground right now. But since it's so deep, there's no sense of drilling, a $250,000 hole just to extend the mine life on year 20 of your asset. No one's going to pay value for that. Where we're seeing the value creation opportunities, really stepping out and targeting, we have 10 to 14 other targets that we are looking to drill and really start to expand, to your point, the string of pearls and finding an additional pearl a couple hundred meters away from McIlvenna Bay. So it's a great question, and it's one that I can't answer because we're right in the throes of it. But there is real tangible opportunity for these things to really grow in size. And right now we have about 40 million tons, and growing that asset and doubling it over time is not out of the question. But we still have a lot of work ahead of us, and it's a very exciting time to be part of Foran.
Oh, and I'd say that for those individuals on the line, when we see markets turn in various directions, so if you start getting a bid for a copper market here, you're going to see the larger cap companies typically move first. So if you are an investor that's typically looking down market at smaller exploration style companies, you may want to look at Foran as an initial investment and then move down market once you've seen the larger market cap companies move in a certain direction. So that would be my 2 cents, but don't take this as investment advice from me. That being said, also, I mean, on the institutional side, you have over 30% institutional ownership. Can you touch on any of those individuals that are sort of publicly listed if we were to do a little bit digging ourselves?
Yeah, no, it's a good question, and I think the one opportunity or the benefit with Foran too is we really have international exposure. So outside the institutions, we have investors in Asia, Australia, Europe, UK. Some of the larger ones that you'll see are the BlackRocks, the BNPs, Fidelities. That's UK, Europe, and the US. There are some Canadian funds as well that are also included. So we really have an international breadth of investors, which I think differentiates us as well, and spreads out the risk profile that some investors may have depending on their risk appetites.
And on the retail side, what kind of uptake have you seen? It seems like you guys are since you've come on, at least, really pushing the envelope as far as marketing and these things are concerned. What kind of uptake have you seen in the retail crowd?
Yeah, it's a little bit tougher to quantify in the retail side of things because there's just so many people out there and so many opportunities to discuss and talk about Foran. So it's really difficult to do that, but it's very important for us to participate in retail events and ensure that our retail investors have a direct line to me and to our management teams to answer questions, because at the end of the day, you're only as good as your marginal buyer, whether it's someone buying 5 million shares and they're institutional, or whether it's someone at home that wants to buy a couple thousand shares to put in their RRSP or TFSA. So it's something that I personally probably haven't done a great job of it in the past, but it's something that is really important to us, and I want to maintain that going forward. So we have seen some uptick and some improvement and increasing on the retail front, but it's something that needs to take a lot more work and effort, and I look forward to that challenge.
No, that's awesome. I mean, I think that the people that we've at least shown it to on the Red Cloud side have been very impressed with your ability to answer their questions. I have another question coming in here, and I think that that's probably on the back of the last two that I just asked. But we've seen some uptake where, as far as Aboriginal investment from various groups into mining stories. Have you seen this, and what kind of conversations are being had to that end?
Yeah, it's a good question. I haven't been directly involved with some of our agreements, but part of our collaboration agreement with the PBC end, included some shares incorporated into that deal because we want them to feel owners and empowered as well. On in an investing basis, I'm not too sure that they've been involved. There are other fields as well, but it's great to see that there is involvement in having people participate and gain equity in their assets or assets that they own or have an idea on, I think are important. And it's great to see, but it's something that, unfortunately I haven't been as close to as some others.
Well, that's good. And, I can be sure that just from all the clients and companies that I speak to that are in and around your market cap, I think to answer that question, you could probably guarantee that there's those conversations going on. There's some very sophisticated groups out there right now that like to participate on the upside with their partners. So I'd say as a follow on, that's probably makes sense. And then beyond that, I mean, it's really a question that's come through here that I can't really phrase correctly without potentially putting you offside, but I would imagine that there's a whole bunch of people poking around in the data room, just beknownst to the lack of copper exposure and new development projects that are potential to come online with the demand that we're trying to go and push for. I think that the majority of individuals will agree that if you want to go and push this short-term pipe dream of having a completely electric vehicles in the world, you're going to need a heck of a lot of copper, not just for those vehicles, but also for the infrastructure to power those vehicles. So what does that look like when a copper market isn't really moving, but the behind the scenes may be quite hectic?
Yeah, no, it's a great question, and you nailed the macro environment over time. I think the best way to answer that is, now is the best time to be building a mine. You want to be building in the down cycle or when the market isn't really moving. And yeah, I think the headlines everywhere, people are looking for more copper and more copper opportunities, and that's fine. But a lot of that time, a lot of it is can be a distraction. And our core focus is to build this operation and build this asset. Not sit back and waiting for someone to come in and build it for us. Because, like I said, I think the timing to strike and timing to build is now. Because when the market does turn, which I believe it will turn, and maybe that takes 2 or 3 years times from now, but you're going to need higher copper prices to incentivize these 0.5% copper open pit assets that cost $10 billion to build in Argentina or Peru. And when those copper prices hit, we hope to be in production and spitting free cash flow while these other assets are playing catch up. So there's always corporate initiatives and stuff to focus on, but we'll let that stuff happen. And it's the old field of dreams adage, right? If you build it, they will come. So our goal is to focus here and build this, and then if people want to come and pay 200% premium, then we'll think about it.
Are they still coming in the middle of a Saskatchewan winter?
Hey, if you build it, right?
Yeah, that's what they say.
We're an underground mine too, so there you go.
Yeah. Is it does your sort of field season end at a certain time? What's the window of opportunity to be doing some more exploration work?
Yeah, it's a good question. There's definitely the shoulder seasons, but we do our summer drill programs. We actually have just as good opportunities in the wintertime because of the way to, especially at Tesla, we can drill on top of the lake and you get the better angle there. So, in the summertime, we do a lot more of the regional, the heli supported drilling. And then in the wintertime, we focus, on some of the other near-term targets that, we can really bring value forward for shareholders.
No, that's good. That's a good point. I think a lot of people have the misconception that you can't work in a lot of places in the winter, but logistically, sometimes it's a lot better to go and move things around when you don't have to go and try to navigate the bush, if you will.
Exactly.
So very good. I mean, if there's any other questions, I recommend that people put it into the chat box. Otherwise, in the next sort of 3 to 6 months, maybe you can just give me a quick summary again of what investors can look forward to as far as news flow. Obviously, we see stocks ebb and flow on news. It looks like you guys are going to have some pretty consistent stuff coming out. Maybe we can leave it there for investors just to have it fresh in their mind.
Yeah, no, absolutely. I think, we hope to have some exploration results out in early October from some of the Tesla follow-up drilling, as well as the new bridge zone that I discussed. We should be having additional exploration results from Higgs later on in the year. Additionally, some funding opportunities, to bridge any gap to construction, specifically targeting, government funding initiatives that haven't really been done in our industry too much of as of late. So, stay tuned for some opportunities there. And then, kind of some of the construction and permitting kind of updates as we travel towards a full construction decision later this year. So exploration, funding and construction go.
That's awesome. There is one other point that is just coming in here right now. Just while we wait for it to come through, because I see the 3 little dots moving there. Just while we wait for it to come through, what groups do you think would be the most likely to be funding on the government side? Is that provincial or federal, or is it kind of you guys going and shaking all the trees and saying, hey, if this is what you guys want, it's time to pony up?
Yeah, no, great question. Right now it's coming from the federal side. We do have great provincial support. Just the coffers in the provinces are much smaller than the feds, and The Fed have a lot of initiatives that are ongoing right now, one of them being their Strategic Innovation Fund that is through the ISED department, and really funding kind of innovative and new technologies and new opportunities to make a greener world. So there's that opportunity. But the other thing that I didn't touch on that is coming through too is the refundable investment tax credit, which will be impacting critical mineral operations in Canada, and that's a potential 30% rebate of your upfront capex, which which is a great sign and a great opportunity for investment opportunities within Canada, and really supporting the building of new assets as opposed to providing funding for expansionary programs. That has typically been the protocol. So we'll try to provide more updates and more information in the future, but those are two kind of big prongs that are new in our industry, and something that I think a lot of investors still don't know much about.
And what's your all-in sustaining cost?
So our all-in sustaining cost is 99 cents, or about $1 a pound on a byproduct basis.
It leaves a little bit on the upside, no?
Yeah, exactly.
No, those are ones that work on the margin are a little bit more difficult, obviously, to get going. And are there any assets that you would consider to be secondary that may have an opportunity to get spun out into another vehicle where money can be spent on them in the short order?
Yeah, great question. I think our property is. They're all consolidated, I would say. We have the Big Stone asset that's about 4 million tons resource that's located 25 kilometers away from McIlvenna Bay. I think our focus is on some of the more regional opportunities close to McIlvenna Bay, but I don't think we're in a position right now to really fund out or vend out any of our properties without fully doing a proper check, because we're finding some significant opportunities so close to McIlvenna Bay that it's really not in the best interest of shareholders to be giving away something that we don't fully understand or fully know yet.
Very smart. And is there a percentage of the properties that have had gold showings as well, or what percentage of the current asset is gold?
Yeah, so the current asset gold is about 6%. Gold. So if you look at McIlvenna Bay, there's about 44 million tons. It's about 65% copper, 30% zinc, and the split is gold silver, that last 10%. So 6 and 4. And
would there be any plans on selling any gold streams or royalties with that kind of percentage?
No, because as you know, with most of these gold streams, it doesn't apply to what the known resources are. It's always applying to your full properties and what the future growth is, because royalty companies never make their money off of the initial and what is known. They always make their money off of what is yet to be uncovered. Think about Franco-Nevada and Goldstrike and Barrick and exactly what happened with that. So no, until we know exactly what we have, that's not something we would entertain. And I think given our position, we could find some more creative financing in different jurisdictions and different opportunities than streaming.
But you're not actually a company that's over a barrel to have to go and give that up at this stage. So it's a nice position for you to be in that sense.
Yeah, exactly. We do have, our shareholder support, Fairfax, 23%, who's always been there to help us along the way, and really opens a lot of doors for us, so we don't have to be going different areas.
And what do you see the value? I mean, obviously having 30% zinc. I mean, zinc is, they always say it's the last letter of the alphabet for a reason. But we've seen it over the last years that it has its run and its heyday. And what do you see for the future of zinc being such a large portion of the project?
Yeah, and it is the last letter of the alphabet, but it's also part of the Canada's critical minerals list, just given the lack of supply. And it really comes down to international countries, specifically China, having such a toehold in a lot of the smelting and refining capacities. Zinc is critical with galvanizing steel. It's been critical in specifically wind power, solar power, and it really has this electrification and green energy tilt that I think a lot of investors still don't understand about. So we're just as excited the zinc as we are the copper.
Good to know. Well, with that, maybe we'll leave it there. But thank you very much, John, for taking the time. It's always a pleasure to chat with you, and I look forward to getting updated as the project progresses.